The market dives overnight before rallying all day. Are the bulls here to stay? This is Invest with Jacob. Okay, guys, so in yesterday's video, we were looking for the market to push a little lower towards the 4240 area because of the NASDAQ to make another low, and that's exactly what we saw. Ironically, the NASDAQ was able to hold its low by 3 points and did not make a low. So does that mean there's a curveball, or are the bulls here to stay? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, if you listened to yesterday's video, you'll remember I said there are a lot of reasons for us to be bouncing off of this area. I was looking a little bit lower towards the 4240 area and then for a bounce, and that's exactly what we saw. We were able to buy basically at the lows yesterday, a little bit above that. Obviously, after hours, they made new lows. But in the regular trading hour lows we were in, and you can see that people did very well. If you want to be part of this winning team, stay tuned for later in the video. But for now, let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. And as we've been talking about for a while, once we got this clear three-wave move down and then this overlapping bounce, we were looking for the diagonal to play out to the downside, and that's exactly what we've seen. We saw the market move down in wave 3 to complete that level down toward the 4235 area. And now we've seen a wave 4 bounce back up that hit the 1.0 and got back into wave 1 territory, which is exactly what you would expect from a diagonal move. Remember, a hallmark of diagonals is that wave 4 overlaps into wave 1 and they continue on to the downside. So the reason that I think we might need another low here, and we have not bottomed out, even though we got a fairly strong push off of that low, is the structure and, quite frankly, the height of this push. And I'll explain what I mean here in just a second. The structure overall is a pretty clear, so far, three-wave move where you have A, B, and C hits the 1.0 almost to the penny before starting to pull back a little bit here at the close. 4,300 is a pretty key area. And so now we have key parameters to the upside. We have hit the 1.0, and that activates the pivot. And so what that means is the 764 to 618 area is a heavy area of support for the bulls if they're going to keep this bullish, and they would look to hold 4283. Should the market pull back and break 4283, that would be a bearish sign, and we would look for this wave 5 to continue on down to give us one more low before then starting some kind of either bounce or reversal. Now, the other reason that I think this is going to play out as the full diagonal to the downside is the strength of this rally. They kind of they didn't meander. I mean, they pushed up okay, but then they pulled back pretty deep and then pushed up okay, and then you have this kind of pullback choppy mess. And so it's not a very impulsive structure. And on top of that, you would expect off of a diagonal to the downside, a really strong reversal to the upside that would happen pretty quickly. Throughout the course of this day, we would have seen them push up over 4,300 pretty strongly, back into this origination point area. And that would be around 4,330 or so. And they were unable to even get through 4,300 with any kind of strength. So I do think it was still a bearish push higher, and we do need a wave lower. But as always, we have to look at the alternate and what that can be. And that alternate is, it is possible we have bottomed here. And if we've bottomed, we would want to see one of two different things. Either a bigger ABC structure where this is A, you get a B, and then you get a C up. And this would take us up in wave 4 of that bigger wave 3 down that I showed you in yesterday's video. And then we'd look for a down move after that. That would be one possibility if they continue higher. The other would be that this is impulsive. It's not my favorite, but it would be a 1, 2, 1, 2 structure, and then they're breaking out to the upside. Now, there's a couple problems with this structure. The first one is the wave 1 of 3 poked over the 764, and generally that's just too high for a wave 1 of 3. It's not that they can't go over the 764, it's that they almost always don't. It's not impossible, it's happened before, but when they go over the 764, you should be very cautious about thinking that's a wave 1 of 3. Also, it's not a great 5-wave structure in wave 1 of 3. So what we do is as I talked about earlier, we look at that pivot, that 618 to 764 area, since we've hit the 1.0, and we know that that's what's going to tell us if they're going to hold and push. So if they hold the pivot, we'd like to see them really push to 4312, and if they hold the pivot up to 4330, come back to the 1.0, and then back to 4348, that would be a decent 5-wave structure. But I would actually look for extensions here, and the reason I'd look for extensions is, 1, the size of wave 1 of 3 is pretty high, and 2, we're coming off a diagonal, and often when you get into the heart of wave 3, coming off of a diagonal, that's where you see the hard push. So it is possible we get a hard push overnight and we see more of a direct move up towards 43.30, which would be kind of the completion of the retrace of the diagonal. And then you see 4 of 3, 5 of 3, and 4 of 5. And ultimately what the bulls want to do is push over this wave 4 high here at about 43.71. And they want to do it in an impulsive fashion. If it's a corrective move, then again, it could be that bigger wave 4 of 3, where we would look for wave 5 of 3 down to the 41.30 area or so. And if they do it in an impulsive fashion, that would look more like a wave 1 of 1 to the upside, and we'd look for a wave 2 down where we'd start to build an impulsive structure back up. So again, guys, I know that we went through a lot of stuff there. The most likely count, in my opinion, is we still need a low, but we do have a lot of reasons to believe the bulls should be pretty strong in this area. And if we've bottomed, we would be looking at one of those two upside structures. Over on the NASDAQ, okay, so on the NASDAQ, we pushed down, and somehow they managed to hold this low by 3 points, which really kind of throws a wrench in things and makes things pretty ugly overall, because you have two pretty ugly counts, and that makes neither of them all that reliable. So on the NASDAQ, we're using caution, and we are going to let the market play out to tell us exactly what we're looking at. But the two most likely paths would be the diagonal to the downside. Same type of concept as on the ES. 3 wave moves. You got 1, 2, 3. Wave 4 comes up into wave 1 territory, which we see. And then you'd look for 5 down to break this low. And again, we would want this to break in a poke type fashion, which we almost got last night. That's what we were looking for. They couldn't quite get it done. So if they break it in a poke type fashion, meaning they come down, 5, 10, 15, 20 points below it, but not 100 or 200 or something like that, and hold that 14,526 to 14,550 area, we would look for a pretty strong reversal off of that. And that would be potentially the start of a next move higher in an impulsive fashion. But if this was a bottom, and it can be a bottom even without making a low, it would be called a truncated wave 5, where wave 5 fails to get lower than wave 3, and then they start to the high side from there. Now, the move on the NASDAQ isn't the prettiest I've ever seen, but you can start to count it 5 waves up. And with that 5 wave up structure where you got up to here and then 4 and 5 is the easiest way to do it on the hourly chart for now. We can dig in later. If we've got a 5 wave structure here, you would expect an ABC move that holds support, and then a really strong push up out of there at that point. So the NASDAQ is a little bit messy. And when things are messy, you take a step back. You don't trade it. You let the chart tell you what's going on. Let the market tell you what's going on. And right now, it's kind of telling us overall in both markets what's going on. If the NASDAQ has bottomed, then we would expect both the ES and the NASDAQ to make a strong push higher. But if the NASDAQ needs to come down and make this low, that would complete the diagonal on the ES as well as on the NASDAQ. And then we'd have a strong low to build off of, so we could look for our next move higher. So NASDAQ, it's going to be best to be patient on. We did get a much stronger push than on ES. Again, when you're coming out of a diagonal to the downside, you should get a pretty strong push back up to the origination point, which is what we got. And since we've gotten that, we have to be cautious about what we're seeing to the upside. Another thing about the NASDAQ, I talked about it several times in many videos, is they still haven't reached their 1.0 line down here at 14,413, 14,410, somewhere around there. They have not reached that target, and that's a pretty weak thing in the overall scheme of the selling. The selling's been strong in a general sense, but the NASDAQ hasn't been able to hit its 1.0, and if it was truly strong breakdown selling, I think they would hit it pretty easily, and more often than not hit the 1,236, and they were unable to do that. The ES has hit the 1,236. The NASDAQ still hasn't even gotten to its 1.0. So the NASDAQ is showing relative weakness to the downside, meaning that the down move is weak on the NASDAQ where it's stronger on other indexes. And so it is very possible we did get a truncated fifth here, but those are rare, and they are not something that we want to trade with a lot of confidence. So we have some patience here and find out if we get the move down. That'll clear up things up really well. If they hold support and start an upward trend, then we know we are more likely bottoming here, especially if they can take out this high at 15,056. Guys, if you like the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the webpage. Once you're there, check out our membership plans area. We have 2 incredible monthly plans, and they both come with a 7-day free trial because I want you to get in there, Become part of the trading team and make sure you love it before you ever spend a penny. You can cancel at any time. We also have our Elliott Wave for Beginners online course. This course is helping real traders make real money and finally understand the market in a way that makes sense. If you're watching the news cycles and you're constantly confused, you're not alone. It's weird that good news makes the market go down and bad news makes the market go up, unless you understand why those things happen and what the key levels are. And that's what Elliott Wave gives you. It gives you a chance to finally understand when and why the market is going where it's going and when it fails. It's 25 videos where I go over 3 different parts. We have our introduction, where I go over your expectations, your mindset and emotion, your KISS method, and why Elliott Wave works. We have the chart setup and tools, where I go through every tool you need to have on your chart to make sure you understand where tops and bottoms are, where the targets are, how to use those targets, when they fail, all those different things. And then the Elliott Wave for Beginners area, where I go through each wave, how they work, what their targets are, what their expectations are, when they fail, what you should look for, the corrective depth theory, the theory of alternation, zigzag, everything you need to know about Elliott Wave to help you understand the market in a way that finally makes sense. The cool thing is it is included in both monthly rooms. So if you don't want to buy the course outright, you can become a member and get the course for free. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as the training material you just saw. We trade the SPY and the QQQ, and we swing trade, which means our trades can last anywhere from a few days to a few months, so we don't trade quite as often as a day trading room does. However, if you are interested in day trading, as well as individual stocks, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as day trading, individual stocks, and PT's reduced risk binary method that absolutely crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures the trade that's so unique. Something you really need to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. All right, the key takeaways for today. We're kind of being patient on both charts here. The ultimate expectation is we still need a wave 5 down on both charts to make a low. On the ES, that would be in the 42.20 to 30 area. Again, 4170 SPX is the line in the sand. It is a line that cannot be broken. If it is, that is very bad for the bulls. Assuming they can come down and make this low, we would look for a very strong reaction from the bulls and a rally up from there. If, however, this was a local bottom, we'd look for a structure to the upside toward at least 4330 to 4380 and then decide from there. Over on the NASDAQ, NASDAQ has a better bounce. It's not the cleanest 5 waves I've ever seen, but sometimes you get that when you get diagonal bounces because they are so strong. It was a pretty good bounce today. They need to push a little bit higher. They need to get to the 14,981, but preferably 14,040 area and take out this wave 4 high. If they do that, we can at least say we have a local bottom and look for a bigger ABC or an impulsive move higher toward the all-time highs. However, if they play out the diagonal for one more low, we would expect one spike down here toward the 14,550 area and then a strong reversal. Guys, that is your market update for today. I will talk to you tomorrow.